So it looks like airlines are going to have bums on seats and hotels are going to be full. We've got the UK scrapping their crazy traffic light system where the amber list will merge into the green, so Brits can go on holiday again, which makes perfect sense because the summer is over. Thanks very much, Boris Johnson. You've also got the FDA over in the US talking about having booster jabs, so it seems just a matter of time before the world reopens, and surely next year tourism is going to be back at its best. This means that you should really look at buying some airlines, some tourism companies, because majority of them are still trading at about a 50% discount pre-Miley Cyrus. This means that you could make an easy 50% if you just bought and waited till next year. Well, hold your horses. I'm not going to waste your time. There's more to this picture, and there's a reason I'm staying away from these said companies, and it's a question we get asked a lot. Should you buy this airline? Because on the chart, it looks like it's a 50% discount. And to be honest, it's a good question. I mean, just looking on the chart and looking at the logic, things like Easyjet, which was just brought up by a member in our chat room. And by the way, if you want chat room access, sign up with eToro on the pinned comment, deposit, make a trade, and you get lifetime access to that chat room. But he was talking about Easyjet. And if you look at the chart in the UK, ticker, I think it's EZY. Easy, yeah, it makes sense. But you can see that it's about a 50% discount to what it was before the whole pandemic happened. So it makes sense. Buy this company and it should go back to that level. Well, hold your horses. There's many reasons why that's not going to happen. But before hearing on why I am not loading up, if you could do me the kind favor and load up on that like button until it turns blue. Seriously, if you do smash that like button, it means the Miley Cyrus will disappear and never come back again, proven by no scientists anywhere in the world. Now, moving on to tourism and why you should be careful buying these companies, and also I will be talking about one tourism company I have actually bought and think out of the lot of them, this is probably the safer option. So one of the biggest mistakes investors make, and genuinely I made this mistake numerous times when I first started trading when I was a baby investor at the ripe old age of 16, 17 and 18, is looking at a chart, seeing it fall and say, it's going to go back to its all-time highs or its previous levels. Even if it goes up half the way, I'm a happy chap. And reality is, it never does. I remember investing in a company called Rockhopper back in God knows when, because they were basically in charge of the oil that they found in the Falkland Islands. And if you're from Argentina, yes, it's the Falkland Islands. Get used to the idea. But jokes aside, when they found oil, this company spiked up. I remember getting in on the way down, thinking it had to go up. And really, well, it never did. I think I can put it that simple. And it was a vital lesson I learned early on, because it doesn't really matter what the chart says in terms of fundamentaling, because the chart is really there for support and resistance, but it doesn't really affect the share price too much, because, for example, the share count of companies, it's changing all the time, profits are changing all the time, employees, CEOs, there's too many factors to factor in simple terms of looking at a chart and deciding if a stock is a buy. It's just not the case. Lots of people seem to just look at the chart and think this is a discount, the financials don't really matter, it's a big company, it's a big name like Easyjet, American Airlines, and it has to go up eventually. And you'd be sort of, forgiven if you thought this is true. But honestly, you really need to dive further into the financials, because what people seem to forget is when you buy a stock, you're not just buying a ticker, a company name, or a chart. You're buying an actual business, which has a lot of risk and things you need to know. I mean, think about it like this, right? Your corner family business that's run by a family you've known for all your life. Let's say all your life. They have a grocery store on the corner, and you know they were looking at selling it for $100,000 and you can afford this $100,000 in this scenario. Then you go in one day and you see that it's half price. Would you just YOLO in and buy? Would you simply just say, look, there's your 50 grand, let's have it? Probably not. You'd probably say, why is it at a discount? You'd probably also ask, can I see your financials? Can I see how much debt you've got? What your employees are like? Who's the runner? Why are you selling? Many questions. And we seem to do this in everyday life. We want discounts when we go shopping for steaks or we go shopping for beer, whiskey, whatever you're buying. Clothes, everybody wants a sale. Your car, how many people haggle with their car? Literally every single person. But when it comes to buying a stock, we don't seem to. We just see the chart and think, hey, this seems cheap. Not the case. Really, people, it's not the case. And coming to airlines, you've got to sort of fathom in, and tourism as well, that why are they at this 50% discount? Well, first thing is, obviously they bottomed out during last year, 2020, and now they've started to recover. Majority of them are up, from that bottom lows as well. And it's more down to hype, more down to people realizing, look, these companies are probably not going to go bankrupt because they've survived this far. The government's helped them out. They've structured themselves in a way where they can survive. And tourism looks like it's going to be back in the next year. So that's a bit of optimism, and rightfully so. But why haven't they gone back to the previous levels? Because stocks are forward looking, and it comes down to how they survived. If we look at Easyjet and other airlines as an example, we can see that they have been piling on debt and also diluting investors. In fact, the airline industry's outstanding debt has jumped 23% since 2020 alone. And that isn't even a full calendar year. The debt currently stands at $340 billion US. And here's an example of Easyjet. Easyjet raised $400 million US of new debt, along with a $1.7 billion US in stock. They say that the funding should provide a buffer and help them through the crazy winter period, where obviously the traffic is a lot slower, which sort of makes sense. I mean, it makes sense that they're doing this while they can, but also as an investor, you've got to weigh up. This money needs to be repaid, and the dilution, of course, as we know, is never a good thing. And if we look at American Airlines, because I know some of you are from the States, so howdy, partner. Again, need to stop doing accents on this bloody channel. But if we look at American Airlines, we can see that their float has nearly gone up 50% in the last 2 years, from 445 million shares outstanding to 644. And they also came out in January to say that they plan to offer up to 1.1 billion in new stock, which is diluting their own investors even more. So you need to be very aware that dilution is happening, debt is rising in these companies, and at some point, they need to pay this back. And you've also got to remember that they are not really buying new planes. So they're not going to sort of hit the floor running, as it were. They're going to have to sort of continue, at best case scenario, the way they were operating before, which brings me on to another aspect, especially with airlines. These companies, airlines, very rarely turn over big profit margins. One of my favorite ones is probably Ryanair, because they have a solid business model where they charge you a gazillion dollars just to take your spare coat onto the plane. But majority of airlines, I mean, look over the last 10 years, how many airlines have gone bust, how many have merged, how many holiday companies have merged. The world of TUI, I mean, if you're from the European region, you might know the world of TUI, but this was actually a group of companies a couple of years ago, and they merged together to sort of dominate the market, and it turns out they're actually really damn struggling. So you sort of need to weigh up these risks and options. You're in a sector that doesn't have huge profit margins, and one bad year could kill an airline. Majority of airlines can disappear in a year. We've seen it happen. I live in a place called Budapest. There used to be an airline called Malev. Actually, funnily enough, the day I moved here, they actually went bankrupt. And we also have to weigh in the fact that the world could go into another lockdown and travel could be restricted. I mean, the world isn't freely opening, and if that happens, these companies are going to take a huge hit. I'm not saying they're not going to be a good buy. I'm not saying they're not even a good buy at this price. I'm just saying do your due diligence, because I think there is much better, safer opportunities out there, especially with airlines and the tourism companies. And in full transparency, I do own some tourism companies, and if you want to see what they are, you can see them if you sign up with Patreon down in the description, and you can go and see some cool perks and even see what stocks I'm buying and selling as I buy and sell them. But I want to tell you what one of them companies is, which I feel is the lowest risk, and that is Carnival Cruise Line. The reason I think this is probably the better option is, first thing, I'm already up a decent amount on this position. I got a very good average, and I think that I won't be buying any more unless it goes back to that average. But the reason I bought this company was the way the company is structured. I feel they've got enough cash on hand that to survive. If any company is, let's say we go into a 5-year situation where it's been like the last year and a half, I think Carnival Cruise could be one of the last companies standing, and if that is the case, they are the lowest risk out of all the cruise companies, for example. So that was sort of my thinking, but I also didn't bet the farm. I definitely didn't use leverage, and I'm just sort of seeing if that one plays out. But because I'm up so much, I simply had to stop adding into it. So if you're looking at buying a tourism company, if you're looking at buying an airline, these are the questions I would ask yourself. First thing is, do they have good cash reserves? The second thing would be, how much dilution are they doing and how much debt are they raising? And if it's not that much in comparison to others, you can sort of maybe justify it a little bit more. And the third thing is, can they weather the storm? And do they have good management that is willing to make tough decisions? And what I mean by that is, are they, over the last 2 years, it's very easy to see what tough management is, because in the last sort of 2 years, management has had to make some very tough and hard decisions. I look at some of the hotels here in Budapest, some of the 5-star hotels, and you have an option to, fire staff, furlough staff, or cut back on staff. And depending on how your outlook is, especially with airlines right now, the companies that have sort of let staff go rather than continue to pay them, in my opinion, that is a management team that I would be much more comfortable investing in. Although it does hurt families, I get that. But in terms of money, you have to be ruthless with your investments at the end of the day. And if you've got a tough situation and they're willing to let go of employees or ground ships or do whatever they need to do, but lower that operating budget. But I'd much rather trust that type of management, people who are going to make tough decisions, look at the numbers, look at the balance sheets, rather than look after sort of people's feelings and, if they're going to get hurt or not. I know it's really hard to say and it's quite tough and it's really unethical, if you want to call it that. But this is the name of the game. My money, I want it to be actively managed as best as possible. And of course, the balance sheet to be as low as possible when you're in tough waters. Now, tourism will recover. The airlines, majority of them probably will recover too. But that in itself does not mean it's a buy. Be objective. Always ask yourself that simple question. Do I need to put my money in this company? And I'm saying need 3 times because majority of you, if you think about it, probably don't need to put your money in this company because there's better plays out there. Stop looking at the chart, look at the fundamentals first. If the fundamentals make sense and you can't find any objections in there, move on to the news, see what the company's got in the future, then look at the chart, find out where you like it, do an intrinsic calculation where you think it'll go, then make a trade. That simple, really? Not that simple, maybe not. Anyway, drop the code word down below, which is Easyjet. Drop that down in the comments, massively help me out. And if you could smash that like button, I'll see you in the next one. Take care, God bless, peace.